Hello, this is Scott Montgomery with the Small Town Mercer. Today I'm going to play three different videos down here in my library, which I should call my movie house now. And in these three videos, I'm going to show you exactly where the investment community is right now in regards to cryptocurrencies. Now, remember, most people, virtually everybody today, does not view cryptocurrency the way I do. I view it as a technical revolution that's going to take over at some point. And it's too sound of an idea and a principle. And it's a better way for the world to use um, money. To me, it's actually money, not currency. So, commodities people feel differently. Commodities people trade in gold and silver and physical assets because physical assets have been the store of value forever on this planet since the beginning of time. But we're in a technological world now, and so physical commodity value is going to be very difficult to operate in a world that's interconnected with one another. And so you have to have a store of value that's quick and that moves. And so I don't know that physical commodities are going to be a store of value going forward. I think digital currencies are going to be that way. So I'm going to show you an interview with two guys, Jay Martin of Cambridge House and E.B. Tucker of Metalla, who's a commodities guy, and Jay Martin interviews all kinds of people in the finance world. And then I'm going to switch over and I'm going to show you, because he's going to bring up the one of the key arguments today against cryptocurrency is one day governments, because they're all powerful, they're going to regulate this and take it over. And then I'm going to play another video after that that's going to kind of explain why that is not the case. And then finally, I'm going to end up with another video that shows why people are going to go into digital currency. So this is going to take you along that road, and I will interject when I can. All right, so let me start out with this. I mean, we'll wheel this around and get to this interview right now. All right. And I will interject when they're done.
And also, I got to tell you, there's going to be Fed coin, okay? It's not going to be private money. I mean, you lost your mind? Like, what do you think these guys are just going to give you private money? Why don't you have a Cambridge House coin? And you'll use that to pay for Cambridge House events, It'll be great because it'll be better. But you know what you got to buy that with? Canadian dollars. So you're going to have to, okay, so it's a small technical detail. But the point is that, like, you're going to have a Fed coin in the U.S. You're going to have a Fed coin in Canada. Mm-hmm. It's infinite control. It's totally controlled. Every single part of your financial life will be controlled by the central bank. Period. Yeah. There's no freedom. I'm telling you. Look, you got to look around, man. This is not a free society. This is a very, very controlled society, as it should be, because people have given the power to be controlled over, and the people they gave it to are going to use it. Right. It's not some sort of like conspiracy. I mean, people want to be controlled. They feel comfortable with the government in charge controlling everything. They feel comfortable at Facebook. Hey, here's me and Jay over having a pizza. Hey, here's me and Jay out at the Glacier National Park. Can you see how much fun we're having? Okay, so this is people been everywhere. These pictures are like geo pin dropped everywhere you are, facially recognized. People love it, man. They love it. This is what they want to do. They want to do this. So they want to do it with their financial life too. Completely on the grid, infinitely controllable, every dollar tracked, every Fed coin tracked. This is the technology. So what do you think? They're going to let you have some private digital currency just for fun? Where you can do your weekend activities, your vices? Well, we know you got a little thing, some vices on the weekend. Man, use your Bitcoin for that. We'll let you do that and not be. No way, man. Are you kidding? It's ridiculous. Totally ridiculous.
Yeah, I gotta
This
ask.
is where you're headed.
Is this what?
Yeah. Okay, I'm going to pull over to me now. Okay, so you see the fundamental misunderstanding with the old financial world and the coming world. Um, by the way, before I get started with that, I'm just going to say that in 2010, I had the same opinion about Bitcoin. Really? What if the internet crashes or something? There goes all your money. Well, and then I studied what Bitcoin was, and then I realized how impossible that scenario really is, you know. Okay, number one, we've given control of our money system to the central bank and to federal governments. They've had complete control over it since 1971. So if that worked out so well, why is there a Bitcoin? I mean, if the central banks did a brilliant job and controlled everything and we're all happy about that, why is there a Bitcoin? There would not be a Bitcoin. Why isn't there a Fed coin? There, because they have inflated the money to the point where it has little to no value. And the only reason people are trading their Canadian dollars and their US dollars for Bitcoin is because those things still have some semblance of value and they want to get rid of it and put it into something that actually works, is actually more secure, and has far more value. Um, you know, you can't, like I said before we started, you can't run around and trading gold coins for a loaf of bread. No one's going to do that. Well, there's going to become a time where in the future, I don't know how long, but in the future, you go to the store and bread is $8 or $7 or $5 or some ridiculous amount. You're going to you spend $400 or $500 per grocery visit, not $400, $500, $600, $700 a month on groceries like we do now. You know, when I was 12 years old, I remember my grandparents complaining because they had a $24 grocery bill and they were buying food for the week, which included steak and vegetables and bread and cereal, as well as peanut butter and ketchup. That was all $24 a week. Okay, that's $100, $125 a month in grocery in 1972. Today it's about $500 to $600. That's what we spend on our family. All right. So this concept is laughable. And I'm sorry to say that because you've got two guys here who are far more brilliant than I am as far as the economic world is concerned. However, they are brilliant in the system that is fading and failing. And it's time to move on to a new system. All right. So for my next video in the line here, let me pot it up here. So I'm going to have to go forward. By the way, my video editor broke, or didn't broke, but my computer updated and it doesn't update. It's too old. I'm sorry. So I can't use the video editor anymore because my computer didn't update to the newest version of it because it's too old, and they updated the video thing and I can't use it anymore. So I'm sorry about that. I have to go back and forth and do like the good old days of teaching. So anyway, so before I bring this up, this is Daniela Cardone.
Welcome back to another
and
edition
she's,
of
whoops, I got ahead of myself. She's going to interview Gordon Chang. And the topic here is just that, a Fed coin, except it's not our Fed coin. It's the Chinese yuan Fed coin. And they're going to have a discussion here about why that's not going to work. So without further ado, here they are.
Cambone. Today we are talking about China's central bank, which is developing the digital yuan. The country's capital city, Beijing, recently handed out 1.5 million as part of a digital currency test during the Lunar New Year. So what are its plans and intentions with its digital currency? Joining me today is an expert on China, Gordon Chang. He is a popular columnist and the author of The Coming Collapse of China. Gordon, it's been a very long time. So nice to see you. Welcome.
Well, thank you so much, Daniela.
Gordon, I wanted to get your thoughts on China rolling out a digital version of its currency. My main question is, are they looking to dethrone the greenback here with it?
Well, China has tried to do that for decades, but it's not making any progress. And in fact, you can even say that they're slipping behind because international usage of the renminbi is like 2% on SWIFT. And that compares to almost 40% for the dollar. China has promised many times, 3 times, to make their currency convertible, which is absolute requirement to dethrone the dollar. They had promised to do that by the turn of the century. They promised to do that by about 2015. They promised to do that by the end of last year. And all that we have seen is actually China tighten control of the currency. So, they can have this general notion that, yes, they're going to have the renminbi as the world's reserve currency, but they're not making any progress.
Gordon, I guess how important is it who will be first? And it definitely seems it will be China, but how important is it, in the hierarchy of things, of who will be the first country to roll out a digital version of its currency? We see that Sweden has plans. Europe is thinking of rolling out a digital version of the euro. So how crucial is it as to who will be first?
I don't think it's really that important because in terms of usage of currency and other matters, which are really what we're talking about, the digital renminbi is really not going, I think, to make much progress. Got to remember that one of the things that China wants to do is to have real-time information on usage of the currency. This is not a cryptocurrency. This is a central bank currency, which means Beijing is going to understand and see how people are using this, which means this is basically totalitarian social control. Now, people in China, of course, will use it because they won't really have too much of a choice. But the point is, somebody in Hong Kong or somebody in Sweden, they're not going to let that happen. And indeed, the other important thing that's going on here, I think, is that China is attacking its digital payment platforms, Alipay and WeChat Pay. So really, this is an attack on the world's most sophisticated digital payment platforms. And so you can see this not as progress, but really as the opposite of progress.
And that's a really good point you were raising, Gordon, about privacy and surveillance. I was going to say, are these digital currencies just a way for the government to have greater control over how people spend their money, where they spend it?
Yeah, and this thing about Alipay, which is in the news, of course, because Jack Ma, the founding force behind Alipay, was disappeared. The Ant IPO was delayed or actually suspended at the last moment. Mm-hmm. And so people do look at Alipay because it is the most used digital payment platform in China. And one could say, look, they're rolling out the central bank's digital currency really as an attempt to undermine Alipay. And of course, that's true also for WeChat Pay. So this really is, I think, it's a substitution maybe of payment platforms, but that's really about it. Because, at the end of the day, I don't see how this really benefits China to have this associated with the central bank. But I can see how it sort of helps the Communist Party maintain control.
Right, and I'm happy you also brought up the fact that it has no similarities with cryptocurrencies like Bitcoin, correct?
Correct, because Bitcoin is divorced from any central bank, from any government. Right. It is meant to be totally private and secure. China's digital currency is going to be a central bank currency, which means, of course, it's backed by the government Communist Party, but it's not going to be secure or safe in that way. People are going to basically surrender their information. Mm-hmm. Alipay is valuable because it has all of this consumer data. Well, that consumer data is going to be taken away and used by the Chinese central government. So this is not an advance.
All right, I'll break it off there. So there you go. Why would you use any central bank currency? because we enjoy being controlled and manipulated and then denied services and then censored. So we enjoy that. Uh-huh. Yeah. Yeah, a lot of people really enjoy that concept. That's why they went to the Capitol on January 6th to show and celebrate all of that lost freedom. That's right. So anyway, um, that's what that causes. That causes more and more events like that to happen, not just here, but all over the world. Other countries not have no. Why would you trade your money? Let's say a dollar. Let's say the U.S. Treasury had a dollar crypto, not a crypto, but a dollar digital coin. The Fed digital coin, right? That the Federal Reserve keeps claiming they want. You're going to trade that in for a yuan coin or something or whatever China comes up with. It's worth 1/20th the value of a U.S. coin. Well, what's the point of that? The reason the yuan is not worth as much is because that way they can dominate in manufacturing, because they don't, in China, they're not necessarily that keen on human rights or paying their workers a decent wage. The government and its allies are the ones that want to control everything. And then you have people in this country who love that system and want to replicate it here in America. Well, Bitcoin, sorry, the largest holder of Bitcoin in this world are people in China. So I don't think that communist government is going to last very long. They're not going to have the money. They're not going to have the resources to have a large army go around conquering people like Hong Kong and Taiwan and what have you, because I think Bitcoin is going to take over and overthrow them, and they're not going to be able to squelch it. Too many people have technology in that country now. And I think it's a matter of time. It may take a long time, but it may not. So I don't know. It's probably not going to happen soon, but it will happen. Okay, and this is the third one. This is Michael Saylor. And I need to... this one has an ad on it. But Michael Saylor is going to give you the corporate version of what's happening. He's the CEO of MicroStrategies. So
the same kind of real estate investments.
Let me see if I can get this out of here.
Portfolios for decades.
There we go. All right, here we go.
One thing that's interesting.
Let me turn this around.
Is, in the perfect gold standard, the store of value is a gold coin, and the medium exchange is a silver coin. As I read the fiat standard, I see, we kind of had to abandon the gold standard because we needed faster money and we needed larger quantities of it. We replaced the gold standard with this network of tens of thousands of banks and hundreds of central banks and armies of accountants and lawyers and bureaucrats. The currency was the medium of exchange, the store of value when the fiat system worked. First, they tried the store of value as gold, right? It seems like they layered on fiat currency over gold to try to do that, and then over time, as the gold got seized and it was synthetic gold or hypothecated gold. And then in 71, the semblance of that started breaking down. And then the store of value in the fiat system was sovereign debt. If we look at the world today, there's all the currency and the theoretical store of value, right? If you ask a corporate treasurer, what are you going to do with your treasury? I need to store my value. Well, I don't hold it in cash outright. I would hold it in government debt, right? Treasuries were the gold standard, right, is treasuries. And that kind of worked. Like, for example, the currency system used to have international currency trading used to kind of work. There was price discovery in the market. For example, you remember when, Greek debt was trading, what was it, like 8% or 9 or 10%? And I remember Spanish debt or Italian debt used to trade 5-6%. I would say if you go back to before the EU was formed, and you had all these countries with all their different currencies, the currencies were in a competitive market. And if a country wanted to keep its currency from collapsing, you had to raise the interest rate. So you remember when people used to have 12% interest rates and 8%? By the way, under the Volcker regime, we go back to the 80s, you had Ronald Reagan, he was fairly conservative. Volcker was conservative. There you had the fiat standard, but they took the interest rates to 18% in the US. Thinking was countries had to compete to make the currency viable. You had to have interest rates that were market set. And in that world, you had 8% 30-year bonds, and you had 5% bonds. In 2010, short-term interest rates were 5%. So you remember you were saying, well, like the money supply was expanding at like 7 or 8%, maybe 7% or something. In that world, if I'm a corporate treasurer, I can get 5 or 6% on bonds, call it credit-worthy bonds, right? AAA credit. The store of value in the fiat system, when it works, and we'll go back to good old days. Ronald Reagan, it was the good old days. When it works, you buy credit grade bonds, AAA rated, you buy sovereign debt, it yields 4, 5, 6%. The money supply expands either 3% or 7%. Say it's expanding at 7 or 8%. You're getting a 2% loss or 1% loss. I give you $100 million. The half-life of the money is 35 years. So in that world, you can have probably 35 years or 30 years is kind of a magic number. It's your career, Safety. So if I'm a CEO or I'm a corporate treasurer and I'm running on the fiat standard in that time period, I can take my capital, I can put it into like credit-worthy bonds, not take a lot of execution risk, not try to guess, what happens with Zoom versus Tesla, and I'm not quote-unquote speculating, right? The fiat standard, when it works, gives you sovereign debt and credit instruments that allow me as a responsible corporate treasurer to protect the assets of the company for the next 20 to 30 years, long enough for the company to execute its business strategy. That used to work, but then something started breaking down over the last 30 years. And today, it's busted. There's no price discovery. Sovereign debt is not a store of value. Last week, the junk bond index dipped below 5%. It was 4.9%. Okay, the theoretical risk on junk bonds, the risk of default to anybody is 4%. But to a rational person, it feels like it's 8%. It's 4 to 8% is the risk on the bond, which means that if you're getting 4% yield, you're at best zero, and at worst, it's a negative real yield of 4% or something after credit adjustment. So that tells you that corporate bonds, sovereign debt, and junk bonds are no longer stores of value, and currencies yield no interest. The U.S. 30-year swap was 72 basis points a year ago. Today, it's 180 or 175 basis points, and that's the best you're going to get. The EU 30-year swap is 20 basis points. It's nothing. There's no yield. So what can you say? You can say the fiat standard has broken down starting the year 2020 because at this point there is no tangible store of value, or all the traditional treasury instruments are no longer stores of value. The system worked.
Whoops.
First, they tried to...
Hit the wrong button, sorry. Okay, back to me. Okay. So the only thing I would disagree with that is now the fiat system broke down starting in 1972. It was a slow bleed. It was paper cuts, and it took another 50 years or so to realize that the paper cuts had leaked so much bleeding that it's weak now. How do you take down a giraffe? A lion can't take it down. He'll just get his brains kicked in. It's 1,000 ticks. That's what'll take down the giraffe. So, we only had 10 or 15 ticks in 1972, 73. We only had 100 ticks in the Reagan years, and that's when this strategy started to come about. Now we've got 1 million ticks, and we're bleeding. So what do you see today? Corporations, their stock drops. So what do? They buy it. They buy it back. And then that's a signal that, well, these are bright people. They're buying their stock back. That's a signal that things are going to get better. So people buy their stock. and then it goes up, and then they sell it, right? That's how they make money. They don't make money this way anymore. Or they just lay off people, or move their company to Vietnam where they pay 28 cents a week as opposed to paying you $15, $20 an hour or more, actually. So that's what's happening there. So under Reagan, the debt bubble was smaller. We had high interest rates prior to him taking office. Matter of fact, I remember it being up to 21% in 1980, right before the election. And he won that election and took over as president and began to use this debt to bring down interest rates. So that's where we started this. And sure, you can give good yields back then. Why is it worth nothing today? Because you keep inflating, you keep inflating, you keep inflating. And a lot of bubbles start to burst, or a lot of balloons start to burst. You don't have that many balloons. People realize they don't work. There's nothing to put in them. And so people are going to run to gold. And then they realize, wait a minute, can't spend gold and silver, really. You're going to give a silver coin that's worth $25 for your groceries? I don't think so. Because you know that those 3 silver coins that you gave up are going to be worth a lot more later on. You remember that story? I don't know, some of you might, most of you probably won't, but remember when some guy took his Bitcoin and bought 2 pizzas? Well, the Bitcoin that he spent, I think that was in 2011, or 2010, I don't remember now. But those Bitcoins are probably worth $5 million today, I think. I don't remember, but so basically back then, everybody thought, boy, he ripped off the pizza place, right? Well, pizza place made $5 million on 2 pizzas, but it only took 10 years to realize that. That's how fast our money is shrinking. And we can't afford not to put some of our money right now, and maybe later on more of our money and more of our money and more of our money into Bitcoin. Now, today you have a lot of speculators and a lot of people speculating which coins are going to go forward and be the best coins. So we're still in the early stages of that. So you're going to see a lot of people getting in the space to make money. But I see it beyond that. I see this as this is going to be our financial system at some point. And as a result, it's more of a political force than it is a monetary force. And I'll be talking more about that in the future. Thank you for watching today. This has been Scott Montgomery of the Small Town Mercer. Have a wonderful day.